All right, guys, weekend's over. Holiday is over. Hope you guys had a fantastic day off yesterday, but it's back to work, right? Back to work Tuesday evening. We're getting ready for Wednesday's trading session. We have a lot to cover tonight. Get a bunch of range in the chart. Get some big news coming tomorrow. I have a lot of great trades on my radar for tomorrow. I'm going to cover all my favorite trade setups in tonight's video to make sure you have a game plan to make some money on Wednesday. As always, though, before we jump in and get this party going tonight, got a lot we're going to cover. Before we jump in, though, make sure you subscribe that we don't miss tomorrow night's video upload. And if you guys enjoyed the video, do me a favor, will you hit that like button? I appreciate you guys supporting this YouTube channel and tuning in tonight. But enough of the intro, right? Let's get ready for Wednesday. Wednesday it's not going to trade itself. We've got a bunch of ranges on the charts right now, right? If you know me, I love range bond markets, range on the Nasdaq, range on the S&P. Definitely big range there on the crude oil. We got some big inflation news coming later on this week, and so we have a bit of those jitters going into this holiday shortened week here. Well, I'll tell you right, remember, buyers have all the control right now on oil after that OPEC production cut we heard about last week. Buyers have a ton of opportunity here on the crude oil. We have potential reversals, slingshot breakouts, so a lot we're going to talk about on the buy side here on crude oil. Over on the S&P and the Nasdaq, this is anything but a bull market right now, right? We're very bearish. But I'll tell you, in the short term, the buyers have some great pendulum swing opportunities. At least in my eyes, I do believe there's money to make on the long side. But we have to be very selective and pick our battles closely, very carefully on the buy side right now. I will talk about how to make money on both sides of this on the way up. And then, of course, most important, the Nasdaq and the S&P had to drop this thing off the highs here for tomorrow. So there are no shortage of money-making opportunities coming into Wednesday. Now, speaking of Wednesday, let's make sure we all get on the same page for tomorrow. There is really two big news events tomorrow. We don't expect the Fed speakers to be that big of an impact here, at least until we hear from CPI on Thursday. Tomorrow morning, 8:30 Eastern time, we have kind of like the little brother or the cousin, right, of the CPI report. The CPI report on Thursday is usually on Tuesday, but because Monday was a holiday, it gets pushed back to Thursday. Are you following along with me here on that? Anyways, long story short, we don't usually, that is an inflation number, it's the producer price number tomorrow. It's usually not the bigger number. Usually the CPI report is the biggest number of the week. These are both inflation numbers. So who knows, right? I wonder if because the PPI number is before the CPI number, and again, the CPI is usually before the PPI, so I wonder if we're going to get a CPI-like reaction to the PPI number. So we might get lucky tomorrow. We might get a really nice catalyst off that PPI number tomorrow morning. Normally, it's not that big of a reaction, so we'll definitely be watching that tomorrow at 8:30 Eastern time, and of course, the FOMC meeting minutes tomorrow afternoon. If you're around tomorrow afternoon, definitely keep that on your radar for tomorrow. Also, too, I know most of us probably heard about the kind of escalation in Russia, the kind of Ukraine conflict, the Ukraine invasion over the weekend. We saw a tremendous amount of firepower, right, coming into Ukraine. Will that keep going? Will that escalation keep brewing? That is something I think the markets are waiting for more information as well. So, most important keys for tomorrow, 8:30 news. 2 o'clock news. I'm not totally convinced how much we're going to get out of that PPI number, but we definitely want to make sure it's on our radar. Markets, of course, are all really waiting for that CPI report on Thursday and a very big retail sales number coming on Friday. But plenty of news, and again, we'll keep an eye open. We'll keep an eye out overnight to see if we get anything coming out of Russia, and hopefully that settles down and they can find some peace there in Ukraine very soon. That is definitely something that we have on our radar. So now you know what's on our radar for tomorrow as far as news and things we're kind of looking at in the overnight. Back to our charts tonight. Let's face it, guys. The money is made on the charts. So whether you trade one of these markets or you trade all of them like we do every morning in our trade room, make sure you watch all the way to the end of this video tonight because you will learn something new throughout each section of tonight's video. I'll provide different trade ideas, different strategy tactics as we go deeper. And you know me, I try to give you a reason to stick around to the end. I'll save the best stuff all the way to the end. So take some notes, grab some screenshots, and if you got questions, hit me up in the comment section. Let's go NASDAQ. We'll go NASDAQ, we'll go S&P, and we'll finish up tonight on the crude oil. Over on the NASDAQ or the QQQs or the micro NASDAQ, be aware, this is a 4,000 tick chart here on the NASDAQ futures. Also keep aware too, everything I talk about in the NASDAQ can pretty much be applied to the S&P and vice versa, right? The NASDAQ and the QQQs, very, very similar right now to the S&P and of course the SPY. So now that you know the basics on that, there are 3 key insights right now that are tipping us off to the easiest way to make money tomorrow. The first one is this bear bias. Look at a 4-hour chart. Look at a daily chart. You probably don't need me to tell you, we are knee deep. We are neck deep right now in a overall bear market. Why is that important? Well, it's important because every time the market pops up right now, as I told you guys last week, the bears are shorting the pops, which usually means as we go higher here, like I said in the introduction, we definitely have potential to make money on the way higher, but be very careful as we go back to these highs, because right when that little voice in your head says, oh my goodness, we're going to be buying, no. Be careful. Those bears are going to be waiting up overhead here. Short those pops. Not a lot has changed since last week's video newsletter. Second big clue here is that strong move lower. Now, why is a strong move lower a big important clue? Because anytime we see a strong move in one direction, we know the odds are very good that we pull back, get a retest of that low. And of course, bears, they're going to want to come in, try to sell that pullback. Where? Maybe right around here somewhere, right? So we know the bears, again, have that long-term bear bias, but they also have all of that momentum off that strong move. Now, we do have to anticipate bears may come in and try to sell high. I'm going to talk about why that's important here in a moment. And then once we take out those lows, do we get a nice strong double bottom reversal? That's something we're keeping an eye on for tomorrow. Or do we break out and run lower? We have a lot of open space here below us if the bears can hold this. That strong move lower is a very, very big piece of the puzzle for tomorrow, and we'll talk about how to make money off it here in a second. The third clue, which is probably the most important clue across all of these markets really for the most part right now, is a range with rotation off the low. What the heck does that mean? Well, first of all, ranges are balanced areas. So when a market gets tossed inside of a range, it'll rotate back and forth. It'll go up, it'll rotate down, it'll go up, it'll rotate down. And again, as I mentioned before, the buyers have a lot of potential right now to complete that rotation, possibly all the way up to the pendulum swing, kind of a symmetrical extension up around the 11.079. But you have to think right now that rotation off the low, again, gives buyers a silver platter for great money making trades going higher here. But again, it also tells us kind of where we expect that rotation to come to an end and potentially either a short back down again, or remember, the bulls were unable to do it today, but that'd be a breakout, right? So if we were able to rotate higher and hold up here, we might get that breakout that has been very elusive for these buyers over the past few weeks. So now you know what's going into it. Now you know the kind of the raw ingredients and what's on my mind right now. How do we make money on this, right? How do we make money on this? Well, buyers have all the chances right now, right? The buyers would love to get a rotation back higher. There'll be buying opportunities here. Buyers would also love to get that bounce off that low for that double bottom reversal. That would be a great trade. Sellers now, bears want to come in and they want to short these pops right off of that high, and the bears, of course, they want to short these breakouts going lower. There's plenty of breakout opportunities as we go lower here. So here's what we'll do tonight. I'm going to talk about the move going higher here right now. Later on in this video, we'll talk about the breakout going lower, reversals off that low. So if you want to cover all the bases, make sure you get a comfortable chair here, take some notes, and we'll cover them all here right now. What you want to think about right now is that as this market goes higher, where do we think the bears are going to want to come in? Think like a seller right now. Think about that high right there, right? Think about, I had that channel drawn on the E-mini. Emini, right? Like that channel right there. This area, if I can get this thing now to pop up a little bit and run higher here and get that momentum kind of pushing for the buyers, what you want to look for is you want to look for one of those classic trade the turns that we always talk about. Right now, the market is grinding higher. Let's see though if we can get this thing to pop higher here. What I'll do is I'll draw a trend line off the highs. I'll bring it down off that low. And then what you want to do is, remember, you cannot buy high right now. If there's one rule you don't want to break, you do not want to buy high right now, because buying high, you're buying right into all the bears who are selling high right now. So the key as we go higher is going to be traps. The key as we go higher really is we need to see a little bit more bullishness here to make sure we're not walking right into a mess, right? Because again, it is overall bearish. But if I can get this little pop going higher here, if I can get the market give me a little more wiggle room, I can ride that momentum going higher. And really the only trade I look for right now is a trap setup off right. Again, it has to be as low as possible. And my favorite entry pattern is always going to be a trap coming off of that low, right? Low of that channel, right below a prior swing. That's the way you're going to want to make money as this market runs higher. Now, let's get serious. Let's talk about how to short this thing off the high. You'll notice as the market ran higher today, anytime we see a strong move in one direction, we expect a pullback and a retest. Look what happened once they retested. Buyers come in once, buyers come in twice, and they dump it. That's exactly what we're looking for up around these highs here for tomorrow. Now, as we go higher, you have to remember that will be a lot of what? A lot of momentum. And anytime we see a strong move in one direction, we expect buyers in this case are going to be trying to hold this and run it higher like they did there. The reason I mention this is because we have to be patient for the short. There are two scenarios to look for that short off the high. One of them, one try for the buyers, two try for the buyers. Grab that trap. I call these crown reversals. Now, one try, remember, whenever we try to rope in the buyers, what we're trying to do here is we're trying to use their stop losses as fuel. So we got to make sure they try once, make sure they try twice, and that's going to give you now, think about where all their stops are, and we can sell right into those stops with that nice strong signal closing below that moving average. You'll learn more about the moving averages, the signals, you'll learn that stuff in our free trading course. That is one way to sell this thing as we take off these highs here, right? Buyers come back, they try once, buyers come back, they try twice. All their stops now are hanging out right below that low. If you're a buyer, you get stopped out, you become a seller, nice strong signal, and we're selling back down into that trading range. Here's another one, right? Another one like we saw here today. Let's say now we make that strong run up. Strong move tells us what? The buyers are going to want to retest that level. They pull back and they do retest the level. What do we always say? Mission accomplished. Once the buyers retest the high, it's a long-term bear market. We're at overhead resistance with a range below us. We can get more aggressive now, not a lot more aggressive, but now we want to trap in some of those weekends. Let those buyers try once. Let them try twice. Now, we don't need that crown reversal like we would need if it hadn't retested. At this point now, one try, two try. Where are stops, right? Where are stops? Give me that nice juicy signal candle, and let's short this sucker back down into this range. Now remember, your job is not done yet. This is where the fun starts. Now we do is with that short kicking butt on the way down, now we draw a trend line off that low. We find a channel off that high. We drill down. Again, this is a 4,000 tick chart. We drill down. We find a prior swing, and repeat after me. First test is the best test off the high of that channel. Now, I'm obviously keeping it pretty simple right now, right? This could be any of the entry patterns that you guys learn in my free trading course. It could be a trap, it could be a failure, it could be a pullback combination, heck, it could be a strength trade on the way lower. And I know most of you guys know these patterns because I get so many emails and screenshots every day of you guys making bank right now on these channels, on these entry patterns, all off the free stuff on our free trading course. But hey, if you're here for the first time right now, if you're one of the few folks who haven't taken the class, haven't learned all the setups, how to time the entry properly, what I'll do is I'll put a link up here for you. You're going to love this free course. Grab that link that popped up. Take the free trading course, because the strategy that I teach in that free course will make it so much easier to know where the winning trades are. It'll help you easily avoid losses. And most importantly, it'll give you a roadmap to follow each morning when you get to your desk, which for me gives me a lot more confidence when I trade. So grab that link. If you're missing too many good trades right now, if you're taking too many losses, take that free course. It's perfect for someone trying to make the jump into full-time trading. And really what it'll do is it'll show you that, next time we get that strong move, they retest, you'll know what to look for the 2-try rule. You'll know how to trigger the short. And then most importantly, you won't miss that follow-up trade, right, as we try to get that roll back down off of that low, off the high. By the way, now, where would the bears want to go? They'd want to take out that low, right? They want to go back down and take out that low. And then once we get there, what? We can look for the buy going back up. We'll talk about the long side here off those lows in a moment. One more thing, though. One more thing. What if we run? What if we run higher? What if something good happens overnight? I don't know, right? Something good happens. The markets love it. We run up, we pull back, and now we don't just pull back and retest and then back down. No. The buyers pull back and they blast off that moving average. Remember, you can't buy that pullback, right? Didn't do it here. Didn't do it there. So we can't trust that pullback. But I'll tell you, when markets rotate off the low, and this is why I said the oil has such a huge opportunity right now for the buyers right now, because oil is an overall bullish market. I'm going to get to the oil a little bit later on in this video. But again, think about as the market rotates off of this low right now, a ton of bullish momentum. So again, it's not likely, but we got to make sure we're ready for it. What if the buyers hold that pullback and they jump off that moving average? This is exactly what we call a 1, 2, 3 breakout. It's a 1, a 2, and a 3-legged move. If we do take out those highs, we pull back to the 21 moving average and we jump, not just jump, but really retest the high and blast right to that high. Now we have a breakout. Now we have a lot of momentum in a bullish short-term trend, right? We're still long-term bearish overall. How do we make money on this? It's pretty easy. Now, with all of that momentum, anytime we see a strong move in one direction, we expect what? A pullback and a retest of that level. Find those prior swings, draw that channel backwards like I just did, bring it down to that low, and then we're looking for any of those entry patterns off the low of that channel. Again, I'm keeping it simple right now. It could be a trap, a failure, a pullback combo. Now, where is that next target as we're going higher? Where would the next objective be? It would definitely be back to retest the high. Oh, and then by the way, once we retest the high, what do you think? Could we go 1, 2, and then dump it back down again? Absolutely. I like that strategy for tomorrow. Get that breakout going higher, right? Grab that first test off that low, still a pretty reliable trade, take the profit off of the high, and then watch those buyers walk right into, again, long-term bear trend. They retest the high, and now we can dump it back down into that trading range. Where's our next big objective overhead? Next big objective, 11,136.5, is really the next big level besides that pendulum swing up overhead here. So again, I'm not afraid of that long side, but they got to get up, they got to hold it, and they've really got to blast it. If they can blast it, we'll find that new channel. We'll drill down, find the entries, right? Take the profit target off at the retest of that high, and then look for possible that short back down. Same patterns we've talked about here already. Now, here's the big question. We got that strong move lower. Okay, how do we buy this thing? How do we buy it off that low? Because I like that trade. And then what about the short? Can we sell it as it goes lower? We definitely can. Let's grab the S&P and let's talk about this. Now, S&P and the Nasdaq, of course, very, very similar. There are 3 key insights right now here on the Emini S&P. We're an overall bear bias. right? So as the market goes higher, we have to expect bears are waiting for us. We have a strong move down. That strong move down says, in order for me to want to be a buyer right now, I'm going to have to get a little bit more of a pop here because, again, we've got that potential channel coming down. We got prior levels sitting right there. We've got to kind of clear that area first before we can really get serious about grabbing those traps off the low of that bull channel. It also tells me that strong move down. It also tells me that we're trying to retest that low, and that, of course, is where buyers can buy off it. Or will they get that breakout and take out that big level, that 35.45 level? That is a big prior high on a weekly chart. Open up a weekly chart and you'll see that level down there. It's kind of the biggest. It's a previous swing high. It'll make for an easy objective going lower. And you can see here that pendulum swing off the high is conveniently right around that same spot. And of course, that puts me to the third one, the range and the rotation off the low. You'll notice right away here, this is a very different looking chart on the S&P than it was in the Nasdaq. The Nasdaq, you'll notice, right, has that range right in the middle. The S&P feels very, very heavy in compared to the Nasdaq, doesn't it? Has that big move down into that trading range. Market made a great pop-up earlier this morning that made it pretty easy to short back down again. And the bears, of course, came in and just whacked it. Again, notice what's going on. Every time the market pops up, the bears are waiting. So we have to be careful, pick our spots wisely as we go higher. We've talked about a lot of the details going higher here already. How do we buy this thing as it goes lower? If we do take out that low, now we have mission accomplished. And this is exactly where we go back into that two-try failure into that new first channel test, right? So as we come down here now, let's say for whatever reason, the bears come in, they hold that pendulum swing, and they run it back down to retest low. It's an overall bear market. It makes perfect sense. They would come in and sell this thing back down again. Now, at that point, once they double bottom, once they retest that low, look what happened last time. Every time we're retesting that low right now, big bounce. Retest that low right now, big bounce, right? So the bounces are coming because most likely sellers don't want to sell low. They had that big move down last Friday, and we're still kind of riding these really extreme lows right now. So if we can take out that low, retest that low here, I like the idea. I like the idea of that two-try failure, right? Take out that low, rope in some of the weekends, right? Remember, you can easily assume that the bigger lot bears are waiting up here, right? Because professionals, they're going to sell high. They're going to sell high at resistance. We don't want to be selling, though, down here. And so at this point, if I can take out that low and get these bears to try twice down here, now, I mentioned earlier that trap, right? I mentioned earlier we go up 1, 2 in that trap, right? That's a very, very good entry, and that definitely would not hurt here either. It's not required on this example because at this point we've already retested that low, and a lot of that momentum now has been absorbed. But don't get me wrong, if I do get that trap, that's even better for that entry off of that low. Strong move, let them retest, rope in some of the rookies, right? These are not the big money traders who are selling into that low. Once they try to get short, again, think about now where their stops are, right? Think about where their pain is. That's the way I always teach to my students in our trade room. Think about where the pain of these bears are going to be. Look for that nice strong signal closing above the moving average. You'll learn all about entry signals in that free course I mentioned earlier. And once we see that nice signal, right, then comes the long. Now remember, at this point now, where does the market want to go? It's going to want to rotate back to this area up here, right? It'll want to make that rotation back up and kind of flesh out this whole big trading range here. So at that point now, the key will be watching that bounce, right? If that bounce can take out that high, right? If they can really punch this thing going higher, bingo. Now we can go out, mark off that high. I can mark off that low. And just like I talked about on the NASDAQ, you cannot buy high right now. If there's one thing you take away from this video tonight, it is do not chase these markets going higher, right? Make sure you buy low. And my definition, by the way, of buying low is getting underneath prior swings, drawing those channels backwards, trapping in some of these bears, and using their stops for fuel, right? You'll learn all about using stops as fuel for traps and failures and pullback combinations off that low. You're going to learn a lot more about that in that free video class that I mentioned earlier. So that's the sequence that you want to buy this thing right now. There definitely is potential for a trap off this low. For example, you can see kind of 1, right, 2. There definitely is a relatively aggressive trap right off this low. Personally, I would rather have them retest that low and then be a buyer, personally, just because it's overnight right now, right? You never kind of know what you're going to get coming out of Asia sometimes. So if you are a little more risk tolerant on this, that is, right? That is kind of that 1, 2. If we can get a trap below that low here, nice strong signal, not a bad trade at all there. Again, it would be a lot more reliable if they retest that low, because now we can rope in some of the rookies here and use their stops as some easy fodder, right, for that move going higher. The next step is what if they take it lower, right? What if they take it lower? Now, there are 4 different breakout patterns that we talk a lot about on these videos. If you recall, we talked about one of them earlier on in this lesson, and that was a 1, 2, 3 breakout. So let's say, for example, we take out that low. But instead now of bouncing back up into that trading range, what the buyers would love, now the bears come back in and they take it and they blast, right? They pull back to the moving average and they blast and run this thing lower. Now remember, I can't sell that first pullback. I know it seems easy enough, but it's not a very reliable trade because of the range. You got to remember, ranges are magnets. And so we don't want to sell that first pullback, right? That is not a reliable trade. That is what you call a 40-60 trade, right? 40% winning ratio. You're not going to make much money long term. If you're a robot, right, it might work, but you're not. You're a human being with emotions. It's very difficult to make money long term on a 40-60 trade, because it's very difficult to keep taking that trade after loss, right? That's why I said a computer might be able to do that, but not us human beings, right? There's a big difference between a 40-60 trade and a 60-40 trade, right? You can make money. You can be psychologically confident off a 60-40 setup because you're going to see more winners than losses. Hope that makes sense. What I want to point out, though, is if we can get that 1, 2, 3 breakout going lower, then I can increase my odds dramatically, because now overall bear market, strong move down, is going to want to retest that low. And again, I can mark off that low. I can mark off that high channel. And this is an 80-20 trade, right? In my experience, right? That's an 80-20 trade right there. So what do you want? You want a 40-60 trade, or you want a 80-20 trade? I think I know the answer to that one. At least I think I do, right? But I don't like that first one, right? I know it's tough to watch it go. I like the second one, right? And again, the goal of this is you're getting all of that momentum going lower. And so with that momentum going lower, the odds are very good they retest that low. Could be a trap, could be a failure, could be a pullback combination. You'll see lots of examples of those in my free trading course. Now, another one is called a pop and grind breakout, right? So we pop lower. Again, we don't reverse off that low. We pop lower and we begin to grind down. These are my favorites because they're so easy to trade. Very simple. Mark a trend line off that low. Okay, don't go like this and go bigger. Okay, I know it's very tempting to, because the way they grind lower can be very misleading sometimes. But once you see it grind down like that, same thing back up here, right? It's going to grind higher, right? You draw that trend line up, you find that low, and you grab it off that low, right? That's obviously a bullish example, right? So as we go lower, draw the tight trend line, mark off that high, and then again, I like to go out and look left and find prior swings, because swings are always where, in my eyes, the best entry is going to be. That's where traps are. Get above the moving average, because that's where buyers can come in, try to buy this. It's not a bull market. It's a strong move down. They're trying to retest the low. Once those buyers walk in and to buy that pullback, you know exactly where their pain is, and you can just punch it right into those stop losses for a retest of that low. That's a very good breakout as well. And then don't forget too, the 2-try breakout. Let's say something crazy happens overnight. The market simply dumps and runs lower, right? That's a pretty strong move. We then pull back to the moving average. Strong move, shallow pullback, lower low in price. You can almost always make money with that pattern right there. Anytime we see a very strong move followed by a shallow pullback. The shallow pullback is the kicker on this because it doesn't give the Fibonacci traders, it doesn't give the deep pullback traders time to get into it, right? So it creates this FOMO in the market. And then once you get that lower low, the lower low basically confirms this now is a trap, not just a V bottom, right? Like back here, right? That's not the pattern right there. See that, right? Strong move, shallow pullback, but a higher low. That's not the pattern, right? That's not it. It's got to go strong move, shallow pullback, lower low. These are, I can't say guaranteed, right? Because the regulars won't like me for that, right? But that's about as close to a guaranteed profit as you're going to get. Strong move, right? Strong move, shallow pullback, lower low. Traps, baby, right? That's a great pattern setup. And then last but not least here for the breakouts, remember, if something happens overnight and the market makes a huge move down, there'll be a gap overnight. The newspapers will say, Russia does this, or, OPEC does, something will happen, right? It'll be a bloodbath. There'll be a big gap on the chart. Anytime you see a really big move overnight, the first thing you do is you don't chase it. The second thing you do is you find a bigger channel, right? Something like that. Then you wait for the pullback. And the pullback, here's the key to the pullback. Right when that pullback starts to accelerate, and you'll see it. What will happen is the pullback will oftentimes go slow, and you're like, oh, this is cool. And all of a sudden, it'll really pop, right? It'll really punch. And that right there is where, when I was a rookie, I would say, oh my goodness, maybe they're reversing it, right? Because the strength that pop, what I would do is, this is many, many years ago, I would fall for it, right? I try to buy that pullback and buy it thinking, well, it's probably gone too far, right? It's, can't keep going forever. I would make it some excuse to buy it. No, all of that bear momentum says what? They're going to want to retest the low. So do not buy that pullback. If they hold it in reversal, good. Find that new channel, mark off that new channel. And again, that's the difference between a 40-60 trade and an 80-20 trade, right? I want to trap in those buyers who aren't familiar with this situation and sell right into those stop losses. So again, if we get a big move overnight, don't chase it. Wait for a deep pullback. And what I always tell my students is the pullback is deep enough when that little voice in your head says, oh, wow, is this a reversal? Right when you feel like that, right when that starts to come into your mind, bam, that's usually right when it's pulled back far enough. It will feel very, very bullish at that point on a faster time frame. But again, remember, it's that big move down. Nobody's going to want to chase it. Right? They want to sell nice and high here. So don't fall for that. Again, it'll start to escalate, right? It'll start to really accelerate, as it goes higher. And that's usually a pretty good sign that right about there is about when you want to look for those traps, right? Trapping those buyers on moving average and just hit them right back to retest the low. It's one of the easiest ways to make money. It's not psychologically easy though. Those big moves down overnight, they can be very, very demanding on our mindset. And not to worry, tomorrow morning, I'll be there with you every step of the process tomorrow in the trade room, and I'll make sure you don't fall for those head fakes. All right, S&P's ready. NASDAQ's ready. Shall we wrap this baby up tonight on the crude oil? Oil, very similar situation right now, except just a little difference. And that, of course, is that tremendously big move we saw late last week from OPEC. We are not a bear bias right now. I know this chart is very bearish right now, but we are definitely not a bear bias. Look at a 4-hour chart. And you tell me if you want to sell into that big pop, right? Look at a 4-hour chart. A daily chart is not as convincing right now, but we saw that big rate, that rocket ship go higher, back to the mid-90s last week, right? Anytime we see a big move like that, again, look at a 4-hour chart. They're going to want to retest that 4-hour high here. That is a very significant bull bias. Why is it important right now? Well, hello, if we know that ranges are magnets and we're sitting at support levels, come on, right? This is a great opportunity for buyers to come in and buy off support below a range. And then at the same time, trade that slingshot. I'll tell you, these are the situations, guys, when you have a bull bias, right? Bull bias. Oh, and don't forget, strong move retested, right? That big move down, strong move. Now, what do we always say? Once they retest, now get ready for liftoff, right? So we definitely have mission accomplished for the bears. Okay, I'm not saying we're going to do this for tomorrow, right? But this is the situation that we're in. And now we have rotation off the low. So range above us. Market's going to want to rotate off that low, right? And want to push back higher here. Oftentimes, when markets rotate off the low, it creates such a strong move higher that it breaks out and busts all the way back in the opposite direction. The buyers could easily be looking at a move back to 93.5. That's the prior week close up there. It seems like 93.5, 93.64 could easily be in the cards for the buyers tomorrow. At the very least, though, the buyers will want to go up and take out some of these highs up here, I'd imagine, right? 91, 90 half level. Now, at the same time, you could argue, right? You could argue the Fed is trying to purposely put us in a recession right now that could easily drag the market down. We may see a breakout going lower, but I definitely need to see more proof with one of those breakout patterns, right? Not with a bull bias, right? With a bull bias, I am not in the business of selling mild breakouts right now below a trading range at support levels below us. We have a lot. These are paper napkin levels right here. These are very mild levels here. We have a lot of space down there, really down to 85, 84 half level. So bears, again, these levels right here are very, very mild. They're basically little mini swings there. So you can almost ignore them on this chart right now. So a lot of opportunity right now for these buyers. How would we buy this thing as it goes higher? Well, first of all, think about now those bears once, those bears twice, right? And buying into those stops, right? Think about that 2-try failure just like that. Right? As they come up, the bears once, the bears twice, and blast it back up. Same idea, right? Think about that one. Then also, too, think about here. Do they pull back? Do they retest? Same basic idea, right? They retest it, trap in some of those bears. 1, 2. We've talked about this many times already. That is another valid setup. Utilizing the stops of those sellers, right? Buying into those stops and using the stops as fuel. It's one of the best edges you're ever going to get in the financial markets. Or let's say, for example, we get a V bottom off the low, right? Let's say that happens here right now. If we go higher and we begin to pop and grind, you know this, draw off that high, find that low, mark off those swings, and repeat after me. First test is the best test. This is a very attractive trade going higher here for tomorrow. Why? Because we know where they want to go. They want to take out some of these pendulum swings, right? Back on the opposite side of that trading range. Now, I like those moves off the low here. Let's say we now go up, right? We go up, we get that pullback, the blast higher here. Now, how do the sellers sell this? Okay, how do I sell this? It makes sense to be a seller, right? You're at resistance, overhead with a range below you. But what we know though? We know first of all, it's an overall bull market, right? Got to be careful. And with that rotation off the low, it's also very bullish at that point. It's now short-term bullish and long-term bullish. How do you sell it? You want to see one of these, right? Either a crown reversal before the retest, right? Before the retest of that high, a crown reversal. Not a horrible trade, right? But again, with a bull bias, be careful, right? Make sure you get the 2 tries, those lower lows in price, and then grab that trap. Or let's say they do pull back, they retest the high, then it's mission accomplished. Now we can rope in some of those weekend buyers who are not paying attention, let them buy twice, and once they buy twice, now their stops as fuel, and they can look for that run going back down into that trading range. Once we get that run going lower, now find that new channel off that low, mark the channel off that high, drill down, and we'll find the entry off the high there. Okay, that is the way you want to sell this thing as it goes higher. And then, of course, right, you know I'm going to say next. What if we pop up here, we make that run higher, we pull back, and we blast, right, off that moving average? Bingo. That is what we call a slingshot breakout. We now have all of that momentum coming off that low. Again, I'm not a huge fan of buying high up here, right? Not a huge fan of that. It would be one of those situations where it'd have to kind of go up, pull back, and really be a very strong run like that for me to want to mark that channel off that high, off that low, drill down, right? So just kind of be aware of that as it goes higher, right? If we do get that kind of pop and grind up, we find that channel, right? We get that long going higher. As we go higher here, I'm going to want to get those buyers here to hold that pullback, jump off that moving average, and then I can find that channel high, I can find that channel low, I can mark off those prior swings, right? Because that's usually where the best entries are going to be. Get below prior swings. For traps, get below the moving average. For failures, get above the EMA. For pullbacks, any of the entry patterns we talk about in that free video course. Or let's say we do end up just punching higher and grinding up, right? I mean, heck, that's pretty easy too. At that point now, the grinder is the giveaway. We mark off that high trend line. We find that bigger channel. Remember, buyers want to buy low. We don't want to buy high. So we go out, we look left, we find some prior swings. We wait for that first test off the low of that channel, right? All of that momentum now tells us what? They're going to want to retest that level, get below prior swings, get below the 21, rope in those bears, use their stops as fuel, and get that retest of the high. And again, like I mentioned earlier, with a long-term bull bias, it's very easy to think I'll take about half the position off at that high and leave the rest of it to run potentially up around that 93.5 level. So be aware of those 4 different breakout patterns I just talked about on the S&P. They can all be applied here, right, as we go higher here. Now, as we go lower, right, as we go lower here, you know, with that long-term bull bias, I got to be careful trading a breakout. So they better come back to that moving average, and they better give us a very convincing breakdown, right? It needs to be very convincing. Didn't do it here, didn't do it there. And remember, guys, it doesn't matter in an overall bull market, the range, it doesn't matter how strong that leg is. It doesn't matter how strong this leg down is. They have to hold that pullback, and they really have to jump. They have to really blast off that 21 EMA. They have to disconnect from the magnetic field that is that trading range, right? Think of those SpaceX rocket ships, right? The NASA rocket ships, right? They need that jetpack, that propulsion to get them out of the Earth's gravitational pull. That's exactly what happens with ranges, right? We have to get a strong breakout and then go. They have to break free of that gravitational pull that is that trading range. Once they do that, then we go into trending mode. And once we have a trend, now we mark off that channel low, we mark off that channel high, and we're looking for, again, I'm keeping it simple right now, looking for traps, failures off the high there. Now, here's a really easy way, and I'll give you guys a reason to keep watching all the way to the end of these videos, but where would a target be down there? We mentioned 85, but anytime you see a 1, 2, 3 breakout, remember this, the first leg and the third leg are oftentimes very symmetrical. Okay, this applies to everything we've talked about so far. I mentioned those 4 breakout patterns earlier. Anytime we see a breakout, the breakout leg becomes the measuring leg, right? So if we do end up getting that 1, 2, 3 breakout going lower and you're taking your trade short off that high and you're wondering, okay, where's a good target? Again, we talked about 85 already, but a very easy way to refine your exit is to measure that first leg and then take the size of that leg and pin it at the high of that channel. And that will give you, obviously I can't give you the exact number right now, but that will give you the measurement you need to find that exit for that 1, 2, 3 breakout and continue right from there. Or, right, they pop and they grind going lower here, right? We start grinding down easy. Mark that low, mark that high, right? Find those channels. You get the point, right? And again, that first leg and that third leg will be an easy way for us to figure out where that kind of final objective is going to be on that move going lower. So keep it in mind as we go lower. Those 4 breakout patterns we talked about earlier. And again, first leg is third leg. Will the buyers take advantage, though, of this potential slingshot, this pendulum swing reversal? Only time will tell. Will we hear more developments out of Russia and Ukraine? Will we get that big reaction to the PPI number tomorrow? Well, the game plan's ready, guys. Now all we need is get a little more time here and get ready for tomorrow morning. Tomorrow morning, 8 o'clock Eastern time. Don't be late. We'll do our mental prep tomorrow morning. We open up our trade room every morning at 8 o'clock Eastern time. If you're looking for a great place to come out and learn and trade along, if you're missing too many good trades right now, if you're taking too many losses, I can help. In that trade room tomorrow morning, the game plan's ready. We'll come out, we'll trade that game plan tomorrow, 8 o'clock Eastern time. I'll put all the membership links, all the free course links down in the description of the YouTube video. So please don't be afraid to grab those links to get started. I would recommend grab the free course first, get your feet wet there, that way you're ready for trading with us soon as a student and a member of our trade room. If you have questions, the easiest way to get help is to call the office or use our live chat. I'm always there to help out on live chat. And again, you can always drop questions in the comment section below. All right, guys, hope you learned a lot here tonight. Hope you use this knowledge and this strategy to make a killing tomorrow. Don't forget, if you liked the video, hit that like button. Make sure you subscribe to our channel. And if you got any questions, hit me up in the comment section below. I'm going to wrap things up for now. We'll come back tomorrow night. We'll do it all again. Hopefully, I'll see you tomorrow morning, though, at the opening bell, 8 o'clock Eastern time, as a student in our trade room. As always, my name is Joseph. Thanks for watching tonight. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.